Okay, right, what I'm going to show you now is the essence of good financial planning, okay? And what we do here at Nevett and Taylor is we explain things as if your financial planning were in the financial bucket, okay? In your financial bucket, I'm going to put any of your cash assets that you've got to manage your money that you can access in the next 7 or 10 days. So in here, we're going to put your bank accounts and any investments that you may have to date. What's important that we distinguish at this stage is the difference between the assets inside the bucket and those assets that sit outside the bucket. So we may well have your house up here as an asset, okay? But the only time you're ever going to reap the benefits of the profits within your house is if you ever downsize at a later date. And so as you do downsize to a smaller house, okay, the profits of that house at that stage may then drop into the financial bucket. What you also may have up here as an asset that's sitting outside of the bucket, this bag of money represents your pension fund. Okay? So when you come to take your benefits from the pension, a quarter of that money on the whole you'll be able to take as a tax-free lump sum, which will drop into the bucket, and the remainder of the money will be used to provide you with an income. Finally, one last asset that we might have in the bucket here, okay, is your business. And at some stage in the future, no doubt you'll sell that business for whatever it's worth at the time, and at that stage, and only at that stage, will the money drop into the bucket. What we've also got for your financial bucket is a regular inflow of money, which would be your salaries. Okay, what you also might have flowing into the bucket are any other sources of income, rental income, or child benefit. If we step into a time machine further down the line, you may well have some state benefits as well, your state pension or your state second pension. And in addition to this, further down the line, you're also going to get some income from your pension funds. Okay? So on the whole, things look great at the minute because all that's going to happen is your financial bucket is going to rise and rise and rise. But as we know, life's not like that, because on the side of your bucket, you have a tap. Okay, and this tap is the cost of your current lifestyle. Okay, filling the cars full of petrol, going to the supermarket, sending the kids out, clothing the kids, all the things that cost you money. Some stage in the future, that level of expenditure is going to stop and going to be replaced by another tap on the bucket. And for the majority of people, this coincides with retirement. And at that stage, we hope to plan with you to enable you to be able to spend more money here doing the things that you've always wanted to do and the things that you enjoy doing. The only time that this level of expenditure will stop is when the final tap on the bucket kicks in later retirement years. And as a general rule of thumb, we tend to find that at this stage, expenditure decreases slightly. Okay? Arguably one final tap on the bucket, the tap for one-off expenditure items, replacing the cars, replacing the double glazing, things like that. Okay? So our job at Nevett and Taylor is not necessarily about managing the individual investments or the individual pensions, but we want to help you manage your financial bucket, because you will undoubtedly find yourself in one of two scenarios. The first scenario is you'll go through life here, get to this stage in life, and you'll turn these taps on so fiercely, enjoying yourself, that without planning, the bucket will run dry and the bucket will be empty. The alternative scenario for you is that you'll get to this stage in life having not planned and not really understanding your money, and the bucket level will be up here somewhere. Unfortunately, if you get to the stage where you pass away when the bucket is this full, then you could quite easily end up giving as much as 40% back to the government in tax. But more importantly, in the essence of the financial planning, if you get to the stage where you pass away and your bucket is still at a level here, then you've considerably failed to do one thing, and that thing is to ensure that you do the things that you should have done in retirement and quite possibly before retirement. And so that's at Nevett and Taylor what we consider to be effective financial planning.